If you're holding any altcoins, make sure that you stay through until the very, very end of the show, because there's two very important charts that we need to be having a look at. And this goes for Bitcoin holders too. You may be in a position where you need to make a decision whether to cut major positions. So stay through until the very, very end. We are seeing a mass sell-off over here, flash crash within the crypto markets. We're going to talk about why this is happening. We're going to talk about where prices are most likely to go next and what you can do in order to hedge against these positions and these downturns, right? So, one day your butthole feels good and the next day it's not feeling so good. There it is, butthole down 63% in just one day. 63% drop in just one day. Smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. A little bit of froth only within the AI sector, the AI agents, and then a couple of the meme coins that recently did 10 to 100x gains in just a matter of days. So those things are getting flushed. The question is, why is this all happening and what should you do next? Well, if you have a look over here, Benjamin Cowan, it was all around the job openings data, which came out yesterday. Remember, this month is absolutely wrought with very, very high impact economic data, which is going to be coming out. We did speak about this in yesterday's show, and I've actually been warning of this type of a sell-off or at least short-term dip over the last week or so when I was already on vacation due to the low volume environment. So this is why it happened, right? Job openings were estimated to come out at 7.74 million. They came out at 8.09 million. Now that may be confusing to many of you, but we're in the sector, as Miles says over here, where essentially good data is bad data, right? We're in that phase of the market. Good data is bad data for risk on assets. We have the FOMC coming up in 2 weeks, right? US data came in hot, causing a spike in the bond yields, right? We know that there's an uninversion of the bond yield market at the moment, and that is going to cause some concern, right? So ISM index higher than expected, JOLTS numbers increasing, and that is where good news equals bad news, and that changes the probabilities of what the chances are of a federal rate cut, right? So now there's only a 5% chance that they're actually going to cut interest rates. So we'll see what happens, right? This all lining up with major events, because also we have the inauguration coming up for Donald Trump at the end of the month with the FOMC. It's a lot of important information, and there's a lot of volatility that you can expect in the market, especially so when you're in a low volume environment. It makes it much easier to move prices, right? Think of it like a low cap altcoin. If you're talking about 1 second, guys, my Siri is going off over here. Hold on. There we go. My Siri has started the YouTube video as well on my mobile device there. So think about it like a low cap meme coin. You're trading $1 million or $2 million meme coin. Someone can come in with $10,000 and they can easily pump or dump that price very, very, very quickly. So it's the same kind of thing over here within the broader markets. When you are in that low volume environment, things can easily move. So S&P 500 getting absolutely whacked as well. Of course, crypto is just going to be a higher beta play based on whatever the stock market is doing. Stock market goes down a little bit, crypto gets absolutely smashed. Stock market goes up a little bit, crypto pumps very, very hard, right? So 75 points down just yesterday alone, pretty much erasing the year-to-date gain. So this year has not been good for the stock market into the open. We've spoken about that. Go back to yesterday's show as well if you want to learn more about the stock markets. We did speak about how there is the risk and the potential of those rolling over, right? Now, this doesn't necessarily, by the way, mean that it's the end of the bull run, right? I don't want to say anything like that. I simply would just state that, you might be going in for a longer-term correction. We do need to give a little bit of time first to see how things play out. But this increases the probability that this is a right translated cycle, leaning towards it finishing just like we saw in the price cycles, also covered in yesterday's YouTube video, most likely around October, November of next year, right? So keep an eye on that. Now, this has been one of the biggest liquidation levels that we've had, or liquidation events that we've seen. As Hasib says over here, we haven't had this level of liquidation craziness in a very, very long time. And in actual fact, there was almost $1 billion worth of liquidations or people liquidated out of the market, 693 million. The majority of those coming from a leverage long traders, right? In order to get liquidated, you would have to be trading on leverage. And this is what we've spoken about. We said, do not trade leverage until you have clarity on where price is going next. While you're in this choppy environment, you are going to get chopped in and out of your positions, and you're going to get absolutely wrecked, right? So you can see over here, one of the biggest events since the last one that we saw, which was on the 9th of December over there. But the bad news over here is that we have a bearish engulfing candle, right? A bearish engulfing candle is when you look at this green candle up over here, and you basically engulfed and gave up every single bit of those gains over there. That forces these buyers to bail out of their positions over there, or they get trapped and they're underwater, and that allows for bears to completely take control. So this is the negative over here, while simultaneously we're in that low volume environment. We have spoken about that. We said that actually the major point, and this was the warning that I issued about a week ago, where I said the warning sign over here is that we're not holding that $100 billion mark when it comes to the 7-day exchange volume. And in order to see crypto sustain its rallies and prices to continue to elevate towards the upside, you would need to see new money being deposited onto the exchanges. Now, we gave the bulls the benefit of the doubt around the fact that it has been the vacation period, and we said we'd give them a couple of days to try and come back, and we'll see. We still need to wait till the end of this week. A lot of people will probably only return back to the office and work and their normal lives sometime next week. But at least the bulls are hanging on by an absolute knife edge at the current levels, and I'm going to show you why. That would mean that you're probably going to get a pullback down into the very least $85,000 and potentially even $78,000, which we'll speak about in a bit, right? So we're seeing a phenomenon, as Alex Kruger says over here, known as exhaustion, right? People are simply exhausted within the crypto market. They're absolutely over it and they're leaving, right? And this is why we need the volume to come back. So we spoke about that drop in the volume over there. We spoke about the bearish divergence, very, very similar to what we saw back in 2021. And we said that, volume needs to come back very, very soon. Otherwise, you do risk dropping down to those low levels where you would probably still put in a macro high low, and then you just push the cycle out further towards the right-hand side. We gave all the analysis yesterday, we spoke about how maybe the dip would come sooner, and then only later on in the year, sometime around October, November 2025, do you put in your actual cycle top. So the month is not yet over. The week is not yet over either. We have 4 days left to go. A lot can happen within this weekly time period, but I did warn about this. It was actually one of the most hated videos that I've put out probably since the last cycle, where I said that I believe that the top was in, where Bitcoin was already trading. My first videos ever, first opportunity to come onto YouTube was when Bitcoin was at $48,000, and I said we're going sub 20,000, and I received a lot of hate around that. This video is no different, right? 9 days ago over there, I did issue the warning. Again, I do want to emphasize, I don't think that we're going into a bear market. I do believe that the bull market is still on, and I just think that under the low volume environment, you could see a deeper sell-off. Now, the question remains, how deep could that sell-off go, right? Well, if we look at the trading range over here, remember, do not ignore the fact that we have left 8-9 month trading range over here where price broke out. And yes, we got a meaningful rally over there. But if we don't start to see volume come back into the market very, very soon, then of course you have to look to the high time frame moving average, which is going to be this one over here. It is your 30 MA is the purple one. Once that level is lost, you can expect that price could easily revert back down to that level to put in that next high low, right? That becomes the major zone. You got low here, and then you would be putting in your next major high low. And this is more on the high time frame. This wouldn't play out this week, right? This would play out over a number of weeks, possibly into the end of January, beginning of February. That is if we even do get those levels. Bulls can quickly save the day by turning this weekly or 5-day candle green, getting prices back above last week's high. But remember, there is, of course, the presence of the bearish bearish engulfing candle with the bearish divergence on the high time frame, right? So that is one thing to look at. Quickly showcasing ETH over here. You can see ETH's high time frame moving average is coming in just below $3,000. What's interesting about that level is I think that is the max pain scenario for ETH as well, with the majority of people longs would be liquidated around that $2,900 level. So don't be surprised if you actually did see a spike slightly below, sweeping that level and taking out those leverage long players on the ETH trade, right? If you look at Solana over here, well, Solana actually already came a couple of days back close towards that that 30-day moving average over there. So this one doesn't have as far to go. We'll speak about Solana as well in a moment. I do believe that Solana is undervalued in terms of its trading range. You can see over here, it didn't overextend quite as far as Bitcoin did, which would have looked something like that, because this is your trading range. You just went slightly above, came back, tested as support, and you do still have the possibility of putting in that high low specifically over there on Solana on the 5-day time frame, right? So keep an eye on that. Now, the problem is with this bearish engulfing candle on the daily time frame and the bearish divergence on the weekly time frame, if we do go in for a deeper pullback, personally, I preferably as a bull, long-term bull, would not want to see the break of the stop and reversal indicator over there. And the stop and reversal indicator is currently coming in at $91,000. Now, the first area of major support that you're going to see on Bitcoin is going to be the 21 weekly exponential moving average, which is going to come in at $85,000. Remember, it's rising each and every single week. So I said I don't want to see the stop and reversal indicator lost, but if it is lost, it's not the end of the world. It simply just shifts the probabilities. Remember, trading is all about weighing up the pros and the cons in the bulls and the bears' favor, right? The probabilities of whether the bulls have more chance of being right or the bears have more chance of being right. And then you want to side where the probabilities are the highest. So staying above the stop and reversal indicator over here, if bulls manage to defend last week's low, right, which last week's low is coming in at exactly $91,271. If bulls manage to somehow hold price action above that and the stop and reversal continues to remain up with the 21 exponential also rising towards the upside, and none of those levels having been breached, well, that starts to shift the weight that the bulls have more momentum and more control, right? Probabilities shift higher in the weighting of the bulls' favor. So this just starts to reduce the odds. If you do break that, personally, I'd like to see that level hold. We'll update you as time goes on, right? The other thing that we can look at over here, which is a little bit of hopium, is if you do manage to defend last week's candle low, the candle low on Bitcoin last week, well, simultaneously, you do have a full reset over here on the stochastic RSI, backed also with very, very low volatility on the high time frames, with the BBWP coming all the way down into the 0 percentile mark. Now, typically what happens is when you remain for quite some time at that 0% mark, you can expect soon after that you'll start to get expansion. And if that expansion is met with a momentum oscillator turning towards the upside, right, just like we saw over here, if we look at this period over here, it starts to turn towards the upside, then we do start to get big moves, right? This is what we previously saw with that time period, right? Coming off low volatility over there, you chop about, and then you get sent into a big move. So maybe, just maybe, we'll still be printing something similar, but personally, I'd really like to see last week's low hold, and therefore this can kind of just be a choppy environment with the potential to turn the corner and move towards the upside. I really think bulls need to survive into next week. That is the key point, right? This week is absolutely critical. Into next week, we have about 7 days left. Bulls need to hold things up for about another 7 days. And then like a pendulum that swings, right? Bears get their chance to break price down. If bears can't break price down, the pendulum will swing back in about a week's time into the bulls' favor. And then bulls are going to have the opportunity to take back control over there, right? As it currently stands, this is your daily time frame. So just quickly highlighting, of course, what I showcased over here. Zooming out a little bit, this was the zoomed in version of that bearish engulfing candle on the daily time frame. And now you can have a look at it over here. This is your major support levels. Remember, we have anchored from the low of the move, which is all the way down at the bottom of the screen on the left, to the top of the move, which is exactly where Bitcoin topped out, of course, at that all-important $108,500 level. And then we look to two important levels, two important zones, that being the 0.382. Why the 0.382? In strong trending moves, bulls typically find support at the 0.382, and then you tend to see trend continuation. If that level is lost, the next important level that I look at is the 50% level. What I like about the 50% level, and this is a worst case scenario for me personally, would be that you have support of the 200 EMA and the 200 MA, which is rising up into that level. This therefore creates extra confluence and strong support, right? So although it feels really scary when you start to see prices come down into these levels, do understand on the daily time frame, there is major technical support. Now, the two levels The 0.382 is coming in at $85,781, and the 0.5 or 50% levels coming in at that $78,758, right? This is going to be the mega support, the super strong support. Now, you definitely do want to see that level hold. Let's just quickly line that up. We've got that at 78,000, and let's go to the 21 EMA is at 83,000, right? So you typically don't want to breach that 21 EMA on the weekly time frame. Remember, it's a bull market as long as you're above it and it's angled towards the upside. As soon as you hold multiple candles below and this EMA starts to angle towards the downside, you threaten the entirety of the bull market, and then you can say that, maybe we're in for much lower prices, right? So that's what we're looking at over there. Again, just to recap, we have momentum oscillators resetting. We have low volatility over here, which is a good thing to look at in combination with that reset on the momentum oscillators. We do have key support levels that are below. This is for the medium and the high time frame. And therefore, any rational trader that's trading the daily, weekly, or higher time frames should be looking for a higher low, a reset, and an opportunity to get exposure into the market. If you're trading on a lower time frame and you're more of a day trader or a short-term swing trader, of course, right now it is risk towards the downside with the potential of dropping all the way down. Percentage-wise, what would that look like? Let's just quickly pull that up over here. So percentage-wise, you'd be looking at least another, to hit those levels, you're looking at about 10% to get to 85K, and then to the behemoth support is another 17% from current levels. From top to bottom, that would have been a 27.36% correction if you do get a move all the way down there. And that's actually par of the course. This is exactly what you would expect within a bull run. Nothing out of the ordinary over there. For the most part, every correction we've had within this particular bull run has been incredibly orderly in the region of 20 to 23%, right? So this would be one of the bigger ones. If it did come all the way down there, that would be 27%. Now, remember, stay till the end, because I did say there's two very important charts that every single one of you do want to be looking at, right? It's not this one. We're going to get to it in a minute. The Crypto Fear and Greed Index still unbelievably in that greed zone at 70. I do believe this is updated for the day. We'll refresh it and we'll have a look again tomorrow. But I would definitely love to see this move all the way back down into the fear zone while simultaneously testing some of those major support levels. If you do see something like that, that's added confidence, right? That will help you to establish good positions. Another bit of bullish hopium, because I am your hopium dealer today for the high time frames, right? As per 𝗕𝗤𝗓𝗓 over there, if you look at this chart between Bitcoin and the Nasdaq QQQ, well, similar to a lot of the charts that we've seen within crypto within this cycle, is the big cup and handle formation, right? You have a beautiful cup and handle formation forming over here, reaccumulation, prices testing right over there at the neckline, just about to break out, right? And we did see this all the way back also in, if you can zoom out and you go to the left here over here, I can't do that obviously on his chart, but that's exactly what we saw just before you did get that next parabolic advancement, right? So a little bit of hopium over there for you. Some additional hopium, and this is always the challenging part that comes to trading, right? You need to determine whether price is in a range or if it's trending, right? So A, is price in a strong trending move, at which point you're looking for high highs and high lows, or is price simply just range bound, right? If it's range bound, well, this becomes your trading range over there, and therefore the loss of the mid range, which was where price basically lost that $100,000 mark, would suggest you'd be looking for a move back down into the range low, whereby support comes in at $91,575. But if this is possibly, the start of an uptrend, why do I say that? Well, if you look towards the structure over here, where you put in the highs, you put in a new swing low, you put in a lower high, and then you put in a lower low, you would therefore be looking for the first higher high and higher low to confirm the start of the trend, right? So you'd be looking for something like that. Well, we did get the higher high with that move up over there. That was the break of structure, right? So as soon as Bitcoin broke above those candle highs on the 4-hour time frame above $100,000, that became your confirmed higher high. Now, if it is a trending move, and remember, this is the A-B scenario, you need to say, A, is this possibly the start of a trend? Or B, are we simply just range bound? If this is the start of the trend, the expectation that you would have would be that you would now be looking for your next high low, right? Somewhere around here, you're looking for the next high low. Now, how do you practically execute on something like this, right? Well, you don't need to be a hero. You don't need to try and buy the dip the whole time, right? That's not what you need to do. All you need to do is you need to highlight the area of interest. Now, what is the area of interest? I would say the area of interest is anywhere above that region. So we highlight it. Simply go and look on a lower time frame. There we go. At the highlighted area of interest. So we're on the 15-minute time frame. For the sake of the example, let's just move that up so you can see nice and clear. And now you simply just want to observe price action on a low time frame, and you want to look for signs of strength. How do you find signs of strength, right? Let's go back to some of the prior ones. You could see over here, you hit a key level, you started to see some beautiful wicks forming over there, and you started to see price move up, right? It got a nice impulsive candle up, and then you came down. You put in your first high low on the wick basis. That would be where you would take an attempt at a long, right? So there you could have taken an attempt at a long, and your stop loss, therefore, would have come below these candles, right? So long over there, stop loss below, you're never 100% sure. That's why you manage your risk accordingly. And what do you know? You get a big move up, you come almost back to entry, and then you continue the journey up, right? You'd therefore be doing the same thing over here. And as you can see, this did result in a pretty substantial move. So as per a risk to reward trade, you would have looked at something like that, right? You might attempt this multiple times, but nevertheless, if you traded all the way up over there, that was a massive trade, right? Considering what you risked versus what your reward was, you got an enormous trade. Now, if this is in fact going to be the start of a trend on the 4-hour time frame, well, therefore, you're looking for your low, and now somewhere around here, your higher low. So study the chart on the low time frame, monitor it. This is if you're a low time frame trader, and look for the opportunity. Look for the wicks over there to start to form at key areas. Look for signs of strength and reversal, and then you can start to take a bit of a trade over there, right? And where would you trade this to? Well, you're traded, of course, if it is the start of a trend above these highs over here. So hypothetically, this is definitely not a trade that you should be taking. But hypothetically, if you start to get the presence of a trade opportunity over there, a trade just to those previous highs would look something like that, right? You're getting a 5-to-1 risk to reward ratio. So that's what I'd be watching over there. If it is not the start of a trending move, but instead we're going to continue to chop, which is probably higher chances. Why is it high chances? Well, it's high chances because we already had a huge move up, and then we started to form a range-bound environment. Plus, we're going into quite an uncertain time with regards to the economic data, what Jerome Powell is going to do, what's going to happen around the Trump inauguration event towards the end of the month. There's a lot of uncertainties. When there's uncertainties in the market, it increases the chances that you're just going to continue to chop. We spoke about that yesterday, right? We did speak about that yesterday. If you are going to continue to chop about, then you should expect that this is probably not going to be a high low, but instead this is going to run back down to the bottom of the range, and it should hold, right? That still presents a trade opportunity. You sweep the bottom of the range low, get back inside the trading range, stop goes below, enter over here, and you can trade it to this zone over here. It becomes TP1. That would be $100,000, and then take profit 2 coming all the way up over here where the previous highs were at about $107,000. So that is more or less the approach. There's always opportunity. If you're optimistic and you look for opportunities in the market, despite the low volume, despite the chop, you can still find those opportunities, right? Now, let's get to the 2 most important charts that you need to be looking at. We did, of course, speak about this yesterday. Here it is, right? Range-bound environment, very, very similar scenario. Range-bound environment, you always take your trades at the extremities. You need to correlate what is Bitcoin doing while simultaneously the USDT dominance hits an extreme. Now, when it gets to this extreme over here, this is your resistance zone. Of course, anyone that's bullish out there and wants to see the market continue towards the upside would want to see the deviation, just like we got these prior times over here. The down moves in USDT dominance result in high lows or upside moves within Bitcoin and the other risk on assets. You'll be looking for something similar into that environment, right? So pay attention, mark this off on your chart. If you do have the chart or you have TradingView, you want to put in USDT.D, that is the USDT dominance chart, and you want to mark the chart out like mine, where you have your range high at about 4.4%, and then you have your range low situated all the way down here at 3.74%. So all eyes on this chart and what it does over here. If this does break out, hold this as support over here, we're in big trouble, right? Because that could be a massive deviation, at which point we could be in for much lower prices. But we need to correlate what Bitcoin is doing at the time, right? As this hits these levels, we need to, so come back tomorrow. We'll probably hit this by tomorrow, and then we'll make a decision, what is price action doing at those key zones. The next most important chart to be looking at is, of course, the Bitcoin dominance. Bitcoin dominance typically trades very similarly to what USDT dominance is, which USDT dominance is running up, and Bitcoin dominance is also running up right now. But the good news is, remember, we treat it as a range right now because that's the most likely outcome. If we are treating it as a range, I'm just going to highlight it and make it a little bit more clear to you. Then this becomes your range low, this becomes your mid-range, this becomes your range high over here, and therefore you should expect that price should reject this level. That would be good for altcoins because we have been in the low time frame, been putting in, new swing lows, lower lows and lower highs. And if you do reject from this key point over here on Bitcoin dominance, that probably results in a risk on move. So things will reprice, right? And then we can reassess when it gets back down to the range low. The alternative is this breaks and holds above the mid-range, at which point you probably see USDT dominance trading up here towards the resistance and holding above that resistance level. And that becomes troublesome, right? Then we're in trouble. We're probably going lower. We'll look at the altcoins in a minute as well to assess where things are most likely to go. But an additional bit of hopium for you guys over here is it would be very, very rare, unlikely, and out of character for crypto and Bitcoin to top without the ETH-USD pair rallying above the prior all-time highs, right? ETH is not dead. Contrary to popular belief, ETH is not dead. There is still work being done there. Same as Solana. Solana, I believe, is one of the top contenders. We'll look at that now as well. Solana is also yet to trade meaningfully above its prior all-time highs. So again, this can give you a little bit of hopium that, it's a bit of a trap scenario, a little bit of a shakeout over here. Yes, you can go lower, but unlikely to be moving into a full-blown bear market, right? Just to be clear. So waiting for this, if ETH were trading above the prior all-time highs, $5,000 plus, that's where I would start to get a little bit worried, right? Just for 𝗓𝗲, is it live? Yes, bro, we are live, sir. This is live only, right? Very rare that I'll do a pre-recorded show. This is live. Okay, looking quickly at the liquidation levels. Yesterday, we spoke about how there was more liquidity towards the upside. Remember, it's not 100% hit rate that you'll always go for the most liquidity first. In this instance, it failed. You went for the lower liquidity first. The good news is that means that the only liquidity left is the liquidity above head, right? Which is coming in, of course, at that same level, $103,000 on the 48-hour look-back period. So we'll keep an eye on that. We'll watch as price potentially moves up into that higher region over there. Let's look at ETH. Let's look at Solana. Okay, a level-to-level range-bound environment. Your extremes that you're looking at over here for ETH is, remember, you got your mid-range. You might see something like that where you sweep the mid-range level, take out all of those, leverage players, people on 3 to 5x leverage longs are probably going to be taken out of their positions at that point. That's what the data suggests. And then you might run it back up, right? ETH becomes really, really strong if ETH can trade and gain acceptance, of course, above that $3,900 mark, right? Breaking above $3,900 creates free air where automatically you can expect ETH is going to probably trade all the way up to around $6,000 or just shy of $6,000. Okay, looking at Solana, we spoke about this yesterday. I did say that on Solana, expect you're probably going to, at the very least, get a throwback into just below $200. Yes, we got it right. We dropped down now to 193. So this would be the trade opportunity now. The trade opportunity would be as soon as Solana, you don't have to long it now, but as soon as Solana reclaims back above the 200 to 205 level like that, and you start to confirm that deviation, that becomes the high low, right? Lows, high lows, next high low over there. That becomes the opportunity. Then you can start to, at the mark where I've made an X, that's where you start to look for the long trade. And then you can take TP1 over here right at the all-time highs. And then after it breaks above that, we're targeting into, the mid to high $300 range, right? The mid to high 300, like 350, somewhere around there is where our next target is going to come into play. But we don't need to look at that yet, right? In terms of the bearish case scenario, because we always have to look at that, the bearish scenario would be, well, you have all this liquidity over here, and if you do sweep it and start to gain acceptance below the all-important 0.382, similar to what I mentioned on Bitcoin, acceptance below $200 to $205 means that, yes, this could then drop further, right? And level to level, then it becomes $160. I think it's more likely that you're going to see prices rebound over here, and that you'll probably reclaim that level, right? But it's not strong odds in favor of either the bulls or the bears. When you don't have strong odds, then you essentially need to sit on your hands, right? Otherwise, you become a gambler. 50-50 odds is what gambling is all about. We're not gamblers over here. We are traders, right? So waiting for that level over there, you did hit your 50% level previously, found support, and you rallied up, right? Okay, what else? What else should we have a look at? We spoke about Phantom yesterday and the possibility of Phantom coming down to the range quarterly, which is the white line over here at 56. Well, it's almost hit that level, right? Just zooming in over there, you can see there's Phantom. It broke the upsloping trend line. We said as soon as that happens, there is going to be a little bit of trouble. It might fall out of bed over here. You might get an interim bounce if it sets in the lower high. Then it becomes high probability that you'll find support over here at 56 cents. That's the next level of interest. What other one should we have a look at over here? Let me know in the comments as well. Just speaking of which, I just want to mention, someone that's a top-notch trader is Andrew Kang, and even he says this about Solana in terms of being one of the better blue chip picks that you can be looking at. It may be someone new coming into the market. Maybe you're looking for opportunities. Solana is a good one based on the technicals that I just gave you. And he says over here, 2025 Sol ETF trade, Solana retraced most of the Trump election pump, almost given that Sol ETF is approved this year, if not in Q1 with approval deadlines in January to March. Okay, of this year. No grayscale overhang like you had with ETH. Remember, grayscale front ran the ETFs by issuing the grayscale trust for both Bitcoin, ETH, and a whole bunch of other coins. You don't have that same overhang, right? Then when the ETF launched, ultimately they convert the BTC and ETH into the ETF by essentially selling, right? So you have this massive overhang that gets absorbed by the ETF providers like BlackRock, Fidelity, etc. You don't have that with Solana. So at least fundamentally, it looks like it creates a strong case, right? Solana valued relatively cheap compared to its network usage and growth rate, which is significantly higher than all of the others, right? Higher than ETH, higher than SUI, higher than any of the other layer ones over there. And consequently, fundamentally and technically, this creates a great opportunity. That's why it's the larger portion of my portfolio, right? The safer blue chip play with much more higher upside potential, in my opinion, than what Ethereum would give you, right? So that's what we're looking at over there. If you do want to trade these things, by the way, before we do move on into the altcoins, there's a link in the description below. Have a look at Blowfin. They are one of my preferred exchanges. The reason I say have a look at them is because they're giving you an amazing offer over here, right? So I obviously want you guys to save as much money as possible, and you're getting 50% cash back on your trades. Remember, exchanges charge a fee for maker-taker fees every time you trade, enter and exit a trade. They take a small percentage of the trade that you've taken, right? Like 0.001 or 0.01, depending on the exchange. These guys are going to give you 50% of that money cash back. This is not a trading bonus. It's withdrawable funds, right? And you'll be surprised at how much that adds up to over time. If you are a high-frequency trader, use the link in the description below. My specific link will qualify you for that bonus, right? All right, cool. Let's continue on. Let me know in the comments what else. Rune, yeah, let's have a look at Rune. I actually haven't had a look at Rune for quite some time. Rune seems also volume-wise to have really struggled to catch a bid, right? To get momentum. Let's move on the daily over here. So there it is on the daily. Hit the resistance level, range high. Pretty much looks like it's moving all the way back down to the range low, which is going to be at $3.32. And this just shows there really hasn't been much of an altcoin season, right? If you look at something like this, it's pretty flat, right? It's pretty flat. Like this is your depression phase as per the Wall Street cheat sheet. You came all the way down. You went through the depression phase. You move into like some hope, optimism a little bit, reset, come back down, scare people out. It's reaccumulating. It takes time. This reaccumulation phase could take a while, which also supports the fact that I do believe this is probably a right translated cycle. I know a lot of analysts and traders out there are looking for full-on parabolic advancements, which, they're calling for things like WIF to go from $2 to $70, $80, $100 in a matter of weeks. Personally, I don't see it, but if it happens, I will be very, very grateful, right? We'll make a lot of money much quicker than I thought we would. I'm more inclined to believe this is a left translated cycle. It's going to take a long time. We're going to have a bull market for the entire of 2025. It may not be the roller coaster exhilaration that some of you are looking for. If you want that exhilaration, feel free. Go and Blowfin and run that slider to 100x leverage. That is not financial advice. I definitely do not actually recommend that. But if you want the exhilaration, that's kind of what you need to be looking for. Okay. Let's continue on over here. Someone says, please say something about XRP. XRP is going to zero. Okay, I'm just kidding. Let's have a look at XRP. I know that Donald Trump was apparently with someone from the XRP Foundation. We can have a look at XRP. How is XRP looking over here today? Which one should we use? Let's use Bitstamp. I got the highest probably at least history on. Let's go on the weekly. So how's it looking over here? I mean, it looks fine. It reminds me of coins like Mantra, that had a big pump. This is not enough history, though. I think we need to go to another one. Let's go into this one on Binance. Okay, there it is. There we go. There we go. More history over there. So here's XRP. Of course, it had the absolutely massive move above. It is surprisingly holding up, which is pretty unbelievable. Your momentum oscillators on the high time frame do show overbought over here. So just be wary of that. But, if you hold it from the bottom over here and you got a big move up, I would 100% consider diversifying a bit. As long as it can remain above the top of the range, which is going to be $1.69, then that is an opportunity, right, for this to reaccumulate and then possibly run it again. Let's just see it on the daily. Daily is putting in new swing lows, lower highs over here, so it is something to be careful of. But in terms of the chart pattern, you have to call it as it is, right? This starts to look like a bull flag, right? So even though it is down sloping, that starts to look like a bull flag, which, yes, of course, it does open up the possibility of breaking out to higher prices, which in this instance would take it to around $5 at that point, which would be absolutely insane. It would be crazy, but crazier things have happened before. We can talk about Zeus Network. Remember, Zeus is one of the coins that we put into whale room very, very, very early, very, very early. I should have probably gone bigger. I only allocated about 1% of my portfolio to it. But nevertheless, it's had a beautiful, beautiful run. So let's have a look at Zeus. There it is. I think we established our Zeus positions all the way down here at the bottom of this trading range. So even now it's 369% up. At one point, we're up 5x on this trade. So far, it looks good, right? Upsloping trend line, higher highs, high lows. Where is your level to hold? This is going to be your key point, right? So your SR flip is going to be right over there. 65, right? You want to defend and hold the 65 cents region. Just be careful if you get there later on. So let's say you see something like this. Let's just grab this on Zeus. If you do see something like this and later on you hit that level, then it's possible that you might be breaking down because you lose the upsloping trend line. That slows the momentum and shifts the possibilities of a deeper drawdown. But if you come into that level soon, like, today or tomorrow, chances are it's probably just going to be yet another high low and it'll be looking good. Okay, so that is Zeus. Let's look at 𝗬𝗢𝗓 as well. There is a request around 𝗬𝗢𝗓. All right. And please do me a favor, guys. If you get any value from the shows whatsoever, do me a massive favor and smash the like button. It definitely gets the show content out there. All right. 𝗬𝗢𝗓 not looking great in regard to the falling wedge formation coming into key support, had the chance to break out over there and it's basically just given up all of those gains. So definitely not what you want to see. You basically on 𝗬𝗓𝗓, you immediately want to see it reclaiming back above $16.50. I wouldn't want it to spend much time below $16 because if it does, of course, you're going to threaten this wick over here. And then that means you're going to threaten this low. And that opens up the possibility, this could run all the way back down to about $10, which is a significant drop. That's like 50-60%. So for 𝗬𝗓𝗓, low volume, just like the rest of the market, you do want to see it break and hold back above 650 ASAP. Okay, let's go to WIF. We did look at WIF yesterday. We spoke about it. We said, it looks absolutely terrible. But this is your major support, right? There it is. We said that's your best case scenario is you sweep all the way down into 150 and then reclaim that level, right? Lose 150. So maybe it drops to 120, 110, but then the snapback above 150 creates the deviation and that opens up the trade. So just for anyone new out there, let me just quickly show you. Remember, this is how it works in trading, right? You sweep down, maybe you go all the way down like that, spike back up, start to show signs of strength with your wick. Now you have something to work with. You have your invalidation, right? Your invalidation would then be below those candles. You can enter the trade over there and you can trade it back to the range highs, which is currently your main range highs, I would say, is about $4, right? That gives you a 5-to-1 risk to reward ratio. So I'd be looking for something like that on WIF. All right. Okay, what else? What else, guys? Let me know in the comments. I'll bring up as many as I possibly can. Let's see, I'm keeping an eye out over there. Let's look at some of the real world assets. I see there is requests around Ondo. Also, you can see even AI, right? Getting absolutely smashed over here. A lot of these coins coming down. This is still high relative to where we initially got in, which was, of course, at this level over here. That was the initial buy. So percentage-wise on EOS, still up 183%. But AI also getting hit pretty significantly over there. So real world assets, let's take a quick look over here. Mantra's been one of the strongest ones. It still looks strong, right? Big move up, consolidating, holding that range over there. More time spent over here consolidating increases the chances of an explosive move beyond that point. The question was around Ondo. Ondo not as strong as Mantra over there, but I probably have to clean this chart up a little bit. Let's just remove some of these things. Okay, there we go. We haven't had a look at this one for quite some time. So keeping it super, super simple. This is going to be your range high. There it is. You know, this is your range high. This is the level you want to see the high-low form on Ondo. So if you can see something like that, you know, maybe it drops a little bit lower, but reaccumulation within this level, that would be the bullish case. Otherwise, if it fails this range high over here, you do have to look down towards the next major level of support, which is going to be coming in at 88 cents, right? So high lows need to form here ASAP. Otherwise, 88 cents is the likely outcome for Ondo in the coming days and weeks. Okay, let's have a look at Render. Render, how's Render doing? Do I have the right one, hopefully? Okay, Render, there it is. All right, also kind of low volume, chopping all about over here. Major support levels that I'll be looking towards is going to be where these previous wicks formed, and that was also resistance. So you can see support, 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 resistance, resistance, support, support. That is going to be the main range low, which is coming in at about $6.26. That is for Render. Okay, so possible reaccumulation. This stuff takes time, right? You might see something like that. Possible reaccumulation again, adding support to why this could be a longer term cycle. By the way, guys, anyone new here, if you do want to learn more about how to analyze charts, trading, etc., there is a free opportunity for you to join, of course, into Whale School. You can learn to trade like a whale in just 10 days. We do start in about 3 weeks' time. The sooner you get signed up, the better. Usually the spots run out very, very quickly. The link is in the description, right? Go through to Whale School. There it is. Click that link. Sign up over there. Make sure you join in. It's completely free thanks to the partners listed below. All right, what else do we have, folks? Let's go, let's go. Yes, I can do Goku. I see there is requests around Goku. Here's Goku, right? It is still holding up. It is still holding up. The SR flip region is the key level, 0.0090. Remember, you can also trade this one on Weex and a couple of other centralized exchanges. They have started to get major listings, right? So imagine what happens when this gets something like a Bybit listing. It's only trading at $12 million market cap now. I think Goku's one to watch. This is an exquisite chart, absolutely stunning. Long-term accumulation, higher highs, high lows. It's beautiful. It's just reaccumulating. It looks really, really good to me. I can only imagine when the market shifts into risk on once again, what this will actually do, right? So, you know, possible high, low. Use the SR flip as the major invalidation. If you did have to lose that, you know, you could be going in for a deeper drawdown. I still hold every single one of my tokens. Okay. What else, folks? Also, let's see quickly on remember the Banter Bubbles 1 minute chart over here does change live, right? As you can see, it's spiking. ENA down, Pepe up. And you can see all the bubbles moving. The usefulness of this, for those of you who are low time frame traders, if you're watching price coming into a key area of support, you can simply observe the first ones to bounce off of a major dip, right? And those are usually the ones that are showing signs of strength. So Banter Bubbles over there looking really, really good, doing its job. Okay, let's see Popcat. Popcat got absolutely annihilated the last time I looked. Is it looking any better, or is it still sick? Let's see. PopCat, it's still very, very sick, right? There's PopCat rejecting from the underside resistance at the mid-range. This is a strong downtrend. I'm being realistic with you. This could very, very easily come back down to just under 50 cents. So 50 cents, that's going to be about another 38% down on PopCat. It's not looking good. There's nothing good I can say about PopCat. It would be miraculous if PopCat somehow just reversed from this point. This is a straight test into the resistance level over there. And look at that rejection, right? Getting absolutely hammered over there. Okay, so that is PopCat for you. All right, what else, guys? Casper, let's have a look at Casper quickly. Where is Casper? Casper over here. Casper might be nearing the range lows. Let's see. So there it is, long-term reaccumulation on this one as well. Better not be distribution, but your range lows coming in at 0.0965, right? 0.0965. That is your major support. And you want to see that, of course, hold, right? So you're looking for something like that. You want to see that hold. And then eventually, when there is a proper alt season and everything runs, the breakout above this level will confirm that. That's 18 cents, which is your range high. Anyone that's a Casper Maxi, I suppose, is feeling very frustrated because this has been a really long-term accumulation, right? It's been 420 days, over 1 year of a range-bound environment. And that's the significance and the importance of, not marrying your coins, but simply looking for where the momentum is. It's fine to hold something for the long run, but at least establish your positions at the range low, which we're coming into that point once again, right? Okay, so that is Casper. I am a Casper holder for what it's worth, guys. I do have a portion of my portfolio in Casper, which I'm holding until the end of the cycle. All right, let's just quickly wrap up. If there's anything else to look at over here, let's quickly go back onto the Bitcoin chart over here. Let's look at Bitcoin dominance. So Bitcoin dominance, finding that resistance over there, right? If I zoom in over there, let's clean this up. You are finding resistance. Look at that perfect test into the mid-range. Look at that wick exactly into the mid-range over there. Let's see USDT dominance. Also rejecting ever so slightly over there. Bitcoin USD on the 4-hour time frame. It would be great to see this start to reclaim these levels, but that little consolidation makes me think probably in the next couple of hours you do still get slightly low prices. Remember, guys, also follow me on X, right? Follow me on X if you want good jokes, right? They are right jokes. How's your butthole feeling today? That was yours truly, an original from myself. Plus, I give extra alpha, right? It's not only that, there is additional alpha. I drop a whole lot of, on-chain things, charts, etc. Follow me on Twitter if you're not already following me on Twitter. That's it from me, folks. I will see all of you on the next one. I hope you have an absolutely wonderful day wherever you are in the world, and I'll catch you all tomorrow. Have a great day, and cheers for now.